It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsarthi. And in this edition of Search for Yields, I'm going to talk to you about market makers and how it will improve the depth in corporate bond market. That is been the bugbear of the market itself, the issuers, the regulators, and the government. And retail participation will also improve and give them much wider products like bonds that can help them beat inflation where other products are failing. And many retail investors are suffering from lack of returns due to high inflation and lack of good returns from the current products available. In this search for yields, you'll learn about what is market making, how it will help in providing liquidity to the markets and improving the corporate bond markets, and how it will help investors and issuers. So, market making is where uh, one of the market participants quotes two-way prices to the market, which is a buy and a sell price. Now, just for example, giving you the example of an equity market, if there is a share of Hindustan Unilever which somebody wants to invest in the market, a market maker can quote a price where they will look to buy 100 shares of lever and sell 100 shares of lever at a certain difference, which is the spread that they take. How the investor gains from this is there is ready liquidity for that particular stock. So imagine while equity markets are very liquid, in corporate bond markets, which is illiquid, not very liquid, and investors find that liquidity is a big issue, that there is a market maker willing to always give you a buy price and a sell price and willing to transact at that price. So an investor wanting to invest in a bond but is hesitant about liquidity can always sell the bond to the market maker. The second is the transparency in prices. So the prices are extremely transparent for a market maker. So market making is basically quoting a buy and a sell price for a certain quantity in an asset, which is a bond for investors. So coming to the second part, how will market making help corporate bond markets? One is in corporate bonds are illiquid, which is generally seen as illiquid, and there is no ready prices available for investors. So if an investor wants to invest in a corporate bond, while platforms like INR bonds have now started to being giving transparent prices, there are still many bonds that are not very transparent. If there is a market maker who's willing to quote a price that is a yield or a price where the market maker is willing to buy at a certain price and sell at a certain price. So the investor already has a transparency in prices as well as liquidity. Now imagine if more and more market makers are making markets in all different bonds, and investors then will automatically start to invest in corporate bonds. Many investors who have not previously invested in corporate bonds will start. Many institutions will participate in this market. You have foreign institutions that will come and participate, and there will be a huge amount of improvement in liquidity and depth of corporate bond markets. Now, which is very good for the bond markets itself, because as we all know, government is a heavy borrower. And the biggest worry for regulators and government is that if government borrowing is very heavy, then where will the private sector go for funds? And if they cannot access a corporate bond market, then it's going to be very difficult for them to raise funds. Now, coming down to the third part, how will it help investors and issuers? Obviously, investor gets a very good deal because there is always a price, and that shows that there is heavy transparency in prices, which was not there earlier. Then there is always liquidity. That is, if investor wants to buy, there is a bond available at a certain price. Investor wants to sell, there is a market price available and a buyer available. So it provides investor both an investment opportunity as well as the comfort of liquidity they want to sell, and both is are going to help improve the uh, more and more investor participation. And if more investors participate in the market, there will be obviously more transactions happening, more prices discovery, and more of offers also coming in terms of more variety of bonds. And this helps issuers too, because many issuers face the problem of accessing corporate bond markets because of lack of depth and lack of depth of investors as well, or a base of investors. So if there is market makers coming in and improving the liquidity in the market and more investor participation is happening, then more issuers will come to the market to raise funds through bonds. Market makers will quote prices on them, and it will improve the transparency, dissemination of information on the corporate, as well as make borrowing costs cheaper for many corporates that are not very significant in the market. So it's a win-win situation for everyone. And yes, the INR bonds is definitely one of the primary movers in the space. Want we will be just watch out for what INR bonds will do the market making space. Thank you very much for listening in. Do not forget to download our app, Quick Invest by INR Bonds, for the best bonds available, most transparency, best price information, and easiest of investment processes. And do not forget to subscribe to our YouTube channel if you have not done so already.